So we have a divergence between Nasdaq and ES. ES made a higher high, whereas Nasdaq made a lower high. For the divergence to get validated, we want to see a closure below this first presentation fair value gap. But so far, Nasdaq is consolidating. Like I said, we already have retraced into 30% of this weekly level. On the weekly chart, you can see this is the 20% retracement level and this is the 30% retracement level, but we already reached 30% retracement level. So for the divergence to be valid, we want to see a closure below this first presented fair value gap. But remember guys, we have red folder news at 10 a.m. So till 10 a.m. we might not see much volatility. So I'll remove this divergence now. See, ES is looking strong. So Nasdaq is also moving up. We have equal highs here coming up on Nasdaq. So we closed above this first presented fair value gap. Oh my God. I just wanted to add two lots. Sorry guys, I actually wanted to add only two lots, but previously it was set up to 30 lots. So that was the reason. So we took out these equal highs also. So next is we are approaching this midpoint on the daily premium wick. So both ES and Nasdaq are looking very strong. So now we are at this midpoint of this daily premium wick. You can see this daily premium wick midpoint. So this midpoint is coinciding with Wednesday's 7 p.m. first presented fair value gap. So market is consolidating around this midpoint, daily premium wick midpoint. Mhm. So now we are inside this bullish fair value gap. So far we can see this bullish fair value gap has been. So on the 1 minute chart, we can see ES has already made a higher high, whereas Nasdaq is still struggling to make a higher high. So if we close again below this bullish fair value gap, then this will become a inversion fair value gap. Then we can start looking for short opportunities. But we want to see a closure with the body below this bullish fair value gap. But so far you can see price is just consolidating because we have red folder news at 10 a.m. So you can see price came back into this new day opening gap, Wednesday's new day opening gap, and we are having a reaction. So it is better to wait for 10 a.m. red folder news, guys. It actually went. So you can see I went long on this fair value gap and I exited. I want to exit at this midpoint, but instead of executing one lot, yesterday it was set to 30 units, so it went up to 60 units. So that is why I had to abruptly close my trade here. So, but the logic was I was entering on this fair value gap at the same time. You can see this is London's high, guys. This red line, dotted dashed line, is today's London high. So these London highs and lows, New York PM session highs and lows, they act as very good support and resistance. So you can see this bullish fair value gap is respected. So we closed strongly above this midpoint, daily week midpoint. So which is a very good indication. So market is still waiting for this 10 a.m. red folder news. So that is why we are not seeing any huge move yet. And we can see already this week we had decent daily candles. So we have to see what Friday is going to offer us. I'm going to wait till 10 a.m. guys, red folder news. And you can see we had a divergence here inside this fair value gap. ES made a higher low, whereas Nasdaq has made a lower low. And you can see this guys. This is Wednesday's first presentation fair value gap. What I'm seeing is market maker sell model could happen. These are the This is the sell side liquidity, this is the consolidation, expansion, accumulation, and reaccumulation. And I want to see, I'm just anticipating a reversal from here after 10 a.m. news so that we can go short and we can clear out this liquidity. So that is what I'm anticipating, but let us see what market will give us. So this is my anticipation, guys. This is the sell side liquidity. This is the expansion, accumulation, reaccumulation, and reversal. And so we are seeing a market maker sell model here. Guys, if you have witnessed this live, so please hit a like button, guys. So you can see we have this equal loss here. So this is nothing but sell side liquidity. At the same time, market can come up to this even London low, but I will be content by exiting by taking my profit at this equal lows, guys. And this red line is the midpoint of this wick quadrants. So you can see the reaction from this. So see the reaction, guys, from this daily quadrant midpoint. So this entire move, right, starting from here was predicted way ahead before it happened. You can check the live stream. Go back and check the live stream. This entire thing was given way ahead. So now you can see we have this 5 minute Thursdays, 5 minute 7 p.m. first presentation fair value gap. So we want to see a closure below this. And this red dashed line is London's high, guys. Today's London's high. So we can come up into this fair value gap. We have a wickless candle, which will act as which will act as liquidity, and we have this volume imbalance also. So we have 2 more minutes for the red folder news. So we are inside this new day opening gap. So we have a volume imbalance here, at the same time huge fair value gap. So we have 30 more seconds for the red folder news. So now we are inside this breaker, guys. This down close candle, this manipulation and this expansion. So we are inside this breaker. So we want to see a rejection from here inside this breaker and fair value gap. So we want to see a rejection. So we want to see a closure again below this new day opening gap with the body. Yes. So we had a closure, good rejection. So guys, I will be exiting my trade at this equal lows, but market can come up to this London low where I have highlighted with this dashed line. But I will be content by exiting at this equal lows, guys. So now we are inside this today's first presentation fair value gap. We want to see a closure below this so that this will become a balanced price range. So we can see this candle closed below 50% of this first presented fair value gap. So I'm putting my stop loss at break even, guys. So now we want to see this candle close again below this first presented fair value gap. So you can see the sensitivity, guys. Sensitivity of the market to these first presented fair value gaps. You can again see, guys, the sensitivity of the market to this daily quadrant levels, daily premium wick quadrant levels. So that is the reason I always tell you to plot all these quadrant levels. At the same time, you can see the sensitivity here. The bodies of the candles never went above this first presented fair value gap on the 1 minute chart, at the same time 15 second chart. This is Wednesday's 7 p.m. first presented fair value gap. And you can see this uh, sky blue very small, which is even not visible. You can see this, see the reaction to the market. Okay, so that is the reason I plot all these levels even on 15-second chart. So this complete market maker sell model was given to you before even this trade has formed. I explained the logic why the market want to come down. We can see this consolidation, expansion, first leg, second leg, and this is the reversal, guys. So this is the liquidity, and we can come even up to this London low. This is the red color dashed line which I plotted here. So market can come up to this, but I will be exiting my trade below these equal lows. So again, this is not looking good, guys. We are seeing rejection from this first presented fair value gap, but I want to see the candles close below this. If that is the case, then I might have to reverse my trade. So you can see again we had a rejection from this new day opening gap. So if market again closes above this complete bearish candle, then we have to think our bias again, revise our bias again. But so far we can see market is still inside this bearish fair value gap. But we want to see a strong rejection from here. But currently market is just consolidating. But we want to see a strong rejection inside this bearish fair value gap. So far market is just consolidating, guys, inside this bearish fair value gap. So you can see the bodies of the candle never closed above this new day opening gap. So this entire thing is just nothing but they engineered more liquidity. So now we want to see a closure below this first presented fair value gap with the body, so that we will have a inversion fair value gap. There was a first attempt to go below this, but the bodies never went below this first presentation fair value gap. So this time we want to see a closure, because we already done the manipulation. We want to see a closure with the body below this first presented fair value gap. So this entire trade logic I have explained even before the market reversed here. You can go back in my live stream and you can listen. When market was here, I already told that this was the sell side liquidity and this was the first expansion leg, second expansion leg, and this was a reversal. So this entire thing was given to you even before the market started reversing here. So if you find the information what I'm sharing useful to you, please subscribe and like the channel and share the channel. So now we want to see this candle close below this bullish fair value gap with the body. So before the market opened, I plotted all these liquidity levels, guys. You can just go back in the live stream and you can watch. I plotted this London level, I plotted these equal highs, and I plotted this London low. So now we are coming for these equal lows, and the next target would be this London low. But I will be content by closing my trade below these equal lows. So once market takes out this liquidity, that's it, guys. I'll not be taking any additional trade because today is Friday, end of the week. So already market has moved so much. So I'm not expecting much volatility. The least I'm expecting is market to go and take out this London low. I'm not sure whether we'll come and take this New York PM session low, but market will surely take out this London low. So we are approaching our target. So now we don't want to see this candle close above 50% of this balanced price range. So we want to see stay below 50%. So now we want to see a strong rejection from this balanced price range. So we don't want to see price close above this. If price again closes above this bullish fair value gap, then it is not good for long positions. So this fair value gap is the last line in the sand, guys. If market closes above this bearish fair value gap, then bears are done. So I want to see a strong rejection inside this bearish fair value gap. We want to see a closure again below this first presented fair value gap. So this is the last fair value gap, guys. If it market closes above this bearish fair value gap, then bears are done. So we want to see a strong rejection from here. So this is the last line in the sand, guys. So we want to see a rejection from here. If market closes above this bearish fair value gap, then we are done. This is not at all looking good for the bears. Okay. So that's it, guys. You can see all this buy side liquidity being built up. This swing high, this swing high, this swing high. All this buy side liquidity has been built up. I think we closed above this bearish fair value gap. But we are still inside this bearish fair value gap. So again, I went short. So now we want to see a strong rejection away from this bearish fair value gap. So price is still consolidating inside this bearish fair value gap. So that is why Friday's price action. So that is why we need to finish our trading maximum by Thursday, guys. Fridays should be only limited to scalping, and maximum limit your trades in Friday, guys, because this is the kind of price action you have to face on Fridays. Like I said, my original bias was correct, but price came back and took my stop loss. But I was right in my bias, so that is the reason again I went short when I started seeing price rejecting inside this bearish fair value gap. But now we want to see this candle again close below this fair value gap, guys, with the body. You can see on the 15-minute chart, price just took out both buyers and sellers. Again, buyers and sellers. Again, it is consolidating. So that is why at the starting of the session itself, I told that today is Friday and don't expect much volatility today and trade with caution. So this time we want to see a closure below this first presented fair value gap with the body, guys, not with the wicks. We want to see a closure with the body. You can see this reaction for the price from the first presented fair value gap. See, this is the 15-second chart, guys. Even here, see the reaction from this first presented fair value gaps. So once this candle closes below this, I will adjust my stop loss to the top of this first presented fair value gap. Let, let us wait for this candle close below this first presented fair value gap. So still we don't have a closure with the body. Still waiting for this candle to close. What a grind, guys. Oh my god. So the previous candle did not give us a closure. So let us wait for this candle so that we can adjust our stop loss to break even. So 5 more seconds for this candle closure. Even this candle did not close below the first presentation yet. What a grind, guys. Oh my god. Oh my god. Oh my god. So we are back into this bearish fair value gap. You can see on this 15-minute chart, nothing has happened. Only, killing both. See this first candle, guys. Wicks and wicks killed both buyers and sellers. The same thing. Killed both buyers and sellers. Again, the next candle. Both buyers and sellers. Again, this candle. The same thing is happening. Again, it is coming back up. Oh my god. So we can see again we never had a closure below this first presented fair value gap with the body. I'm just moving my stop loss, guys, in case price might take out these equal highs and again it might come back. Because my bias is still bearish, I wanted to see these equal lows being taken out. I'm reversing my trade, guys, because now again we have respected this first presented fair value gap. Again we closed above this swing high. Again price has closed below this new day opening gap, but did not close above this with the body. Now we can see there is a divergence between Nasdaq and ES. ES made a lower low, lower high, whereas Nasdaq made a higher high. So if this is the reversal, then I have to reverse my trade again. Yes. We have to validate the divergence. But so far we did not close again above this new day opening gap. We took out this buy side liquidity. So I think we have a divergence on Nasdaq and ES. Nasdaq made a higher high, whereas ES made a lower high. So that is the reason again I went short. So this new day opening gap will be the last line in the sand, guys. If we close again above this, we'll be bullish. So for the divergence to be valid, we need to close below this swing low so that this will become a bearish breaker. So this candle will become a bearish breaker if this candle closes below the swing low. So then the divergence will be valid. So let me plot the divergence. You can see on ES, we made a lower high, whereas on Nasdaq, we made a higher high. So that is the reason again I reversed my trade, again I went short. So target is still same, guys, equal lows, market maker sell model. What a manipulation, guys. Huge manipulation, heavy manipulation. They killed all the buyers. Now I think now market should be heavy, guys. Now we should be seeing lower prices. Now we need to close below this bullish fair value gap so that we can have inversion and we can go short. So now we want to see price respect this breaker and price should not close above this breaker. So we have breaker and bearish fair value gap. If price again closes this entire bearish fair value gap, then I can't do it. Then I think I'll stop the live streaming, guys, because there is nothing here. Market is just moving back and forth, killing buyers and sellers. So there is nothing happening here. I don't know what other live streamers are doing now. I think everybody will be scratching their heads. Oh my god, see again back. So we want price to respect this bearish fair value gap, this bearish order block, and we want to see a strong rejection from here. This is the last line in the sand, guys. Yes, this is the kind of expansion we want. We want to see strong candles, not wicks. We want to see strong candles with the body. My God, this trade is taking ages. Oh my God. Oh my. Oh my god. Oh my god. Oh my god. Guys, my take profit is not hit. My god. अरे अरे oh my god. Oh my god. Oh my god. Wow. I don't know why my take profit is not getting hit, guys, on the trading viewer. I don't know what is the problem. Or maybe I'll put buy not. Why even why this take profit is not getting hit? Oh my god. Otherwise, I'll put my stop loss, guys. Here, we'll see. Alright. What the hell, man? Even my stop loss. Trading view is broken, guys. My stop loss and take profit, neither of them are getting hit. Buy order. I'm not even able to place my stop loss order, guys. See? Nothing is working. Either stop loss is not working, take profit is not working, neither of them are working. What the hell is wrong with this? Oh my god. What a manipulation, guys. What a manipulation. Heavy, heavy manipulation. So you witnessed everything live. Like I said, we were anticipating bearish prices. Okay. That's it, guys. That's it for today. Thank you.